Okay, before we get started, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, all right, so let us get started straight away. This is the pretty much the last week of the year, I guess, that where the markets. Please make sure that you refer to the timetable of when the markets are on and or not on. You should have received an email through your MetaTrader of when the markets are applicable to you. Usually you will see it somewhere in your mailbox. So if from your trading terminal down the bottom, then just go across to mailbox, and if you double click on that, it's basically it gives you a schedule of the hours that the markets are on, depending what markets you are trading. So please make sure that you're aware of those in really quick summary format. Generally, at least the FX markets are closed on Christmas Day and on New Year's Day. Usually, they're the only 2 days that they're not open in the whole year. So on Boxing Day and the 27th and the 28th and those days, as long as it's not a weekend, it will be open. So you feel free. It's an opportunity to do some revision, have a look at what's been going on and those types of things. As far as our classes are concerned for this year, today will be the last one. What I'll do is I'll try and dig up a couple of older classes for you to revise over the Christmas period. We will resume back on the 4th of January. I will email everybody anyway, so you will receive an email knowing what the schedule is. But just letting you know, so I will be taking a little break myself over the Christmas period, as most of you would as well from your businesses, from your jobs, employment, whatever that is. So it is a time that you can come back and review, look at our trading plans and things of that nature. So I will prepare something for you to send out so that you can do over the Christmas period, so that we can effectively do a reset on our trading and come fresh in the year ready to go. Okay, so that's the formalities. There you have it. So today will be the last class for this year, and as I said, I will email you. Now, what has the market in store for us this week? Well, it's very light on data, not much occurring. Of course, we finally got what most people were expecting last week. Just in case anybody does not realize or didn't realize, the Fed did finally increase their interest rates by 0.25%, and they went up to 0.5%. The market went in all kinds of directions. Largely, that move was already factored in. Most people were expecting such a movement in the market, so it perhaps didn't do anything spectacular as we were expecting. Other major news that came out last week was the Japanese monetary, I guess, announcement that they basically announced that they will continue their quantitative easing program. In other words, a devaluation of their currency. In the way that they do that is essentially they will write they will buy bonds into the markets, in essence, flooding the market with more Japanese yen, to the order of 80 billion yen. Initially, currencies like the US yen spiked off that, and then they came back, and I guess it was basically largely interpreted by the market is not sufficient, as their previous announcement to their previous QE program was in the order of 300 trillion. So it was significantly lower than that. So the markets reacted to it accordingly. We'll have a look at the charts. We've actually got surprisingly, I've got a lot of setups for today. So we're going to we're going to play some trades, which is a good thing. I'm just going to have to make sure that these trades remain monitored and my one-to-one points remain firm, because pretty much I'm not going to be watching none of the screens as pretty much after I finish today's class. All right, so the good news is that we can place our orders in and make sure that we get out at the correct spots, and we'll pre-program all that in for us right now. Okay, in terms of What has that meant? At the end of the year, this year, I guess, was a US very pro strong US dollar this year. Our Aussie dollar sort of, I believe towards the start of the year, we were short in Aussie dollar in the 83 range or thereabouts, and we shorted all the way to 70. So we got some really nice trades out of that. The flavor for next year is with that Fed rate decision in an increase of rates for the US currency. What does that actually mean for the rest of the world? What does that mean for the economy, for us as traders and so forth? Well, they also added in the FOMC meetings that they feel that there's probably going to be 3 to 4 more rates increases in 2016. So the key for the Fed Reserve is how quickly they implement these increases, and that's their danger as well. So if anything has already been displayed by the current FOMC board, headed by Miss Yellen, is her, I guess, dovish nature, not as hawkish as predecessors, and definitely took her time to pull the trigger on what many analysts believe should have been done a long time ago, way back in September. Nevertheless, it's done, and the new cycle starts. So it's a year that's about to begin with a pro US dollar. If I was to think of instant trades that come to hand, I always, for a fundamental trade, if sometimes we try to pick out a trade that is going to last us an entire year or a significant portion of that year, we're looking for economies that are diverging. In other words, for example, if we look at the US yen, US wants to, and they're already started the process of increasing the strength in their currency, and the Japanese yen is the opposite to that, where they're starting the process of decreasing the strength of their currency. So a long dollar yen trade now becomes a little bit more attractive as well, because the US has got a higher interest rate. So it's somewhat of a little carry trade, not as strong as if it was like a long Aussie yen trade, but it's still a little bit of a carry trade. And if the both economies are diverging, well, then it's a trade that you could perhaps hold for a longer term. We'll talk about that as I pull them up. For the final week of the year, the data release is very, very light. You're seeing that on my screen right now. The ones of most important are perhaps the US, which virtually happens, the unemployment figures here virtually happens on Christmas Day for us. It's 12:30 midnight, but it is the 25th because of the time differences. And we got the GBP trade current account. Kiwi trade balance is also going to be important. Now, it's little data. This week, I'm not going to nominate a currency which is going to be the most volatile. I guess if any, is probably going to be possibly. I feel the Kiwi dollar. All right, but we'll need to wait and see. In other words, for what we have this week, it's small data. A lot of the players are already out of the market, and the volumes are a lot. Traditionally, this week is possibly in the order of around about 25% smaller volumes than normal. Okay, let's get our charts going. If you have any questions, please type them in. This is your opportunity to do that. As I see them, I will address them. One last thing that I will add that's just come to mind. A stronger dollar also means not great news for commodities, specifically gold. Okay, um, and even other types of instruments that have become popular in recent times, such as things like Bitcoin. All right, so a stronger US dollar changes where people want to put their money. They'd rather have it in an interest-bearing currency in a bank than in a piece of metal which does not bear any interest at all. Okay, let's get our charts going and we'll get started. First up, Aussie dollar daily chart. The pattern that we've been tracking is playing out really, really well. If anything, the only disappointments with this pattern is that I never got a trade up the top there. Okay, we pretty much got this pattern from around about here. So you can see that when we get good at pattern trading, we can, in many ways, we have a good idea of where we feel the market is going to take us. However, I've tried to be relatively conservative on our Monday classes, and we don't just take shorts just because we're getting close to the edge of a pattern. All right. However, right now, if we have a look at this, do we have a current setup right there? What do we feel? Is that a setup for us? Okay, I've got one yes, two inside bar, three, four, five. Okay, great. It is a really good setup. It's an inside bar setup, which basically means it's also occurred. We've come down and tested there. We've got the fractal sitting with what we want, and at the moment we would be waiting to break that top of that candle. Now, if we were to break the bottom of the candle first, the trade becomes void. Okay, there is a possibility with this particular setup, especially because this is a week where possibly the market's not going to move as much. There's a possibility that we may get another inside candle. So what I'm saying is this current candle tomorrow morning may look like that with a little wick there, and let me highlight that wick there, which basically means you would get three inside candles or a third one. And then what you would have to do, if we had our order over there to buy, okay, and we had not been triggered yet, and as long as the bottom had not been broken, then what you would have to do when this candle starts here on the following day is you transfer your entry to that level to buy off that level. Does everybody understand that? Okay, now this has not happened yet, but I just get a feeling that it may. Okay, does everybody understand what I've just explained? If you do not, just type in question mark so that I can know. Okay, we're all good. All right, so in that case, what we're going to do is we're going to take this trade with an entry about there. My stop is going to be there. And does that give me enough room to get to the top? Yes, it does. My 1-to-1 point will be there somewhere. So I'm comfortable with that. And then should I stay in the trade for the 2-to-1, it's actually the second half. If we break that top, it should have enough momentum to get me there as well. But the 1-to-1 is inside the pattern. So that's a thumbs up for me. So let me just measure this out and give me one moment and I'll work it all out. I've got a high of 72.00, so I'm going to try get in at 72.0. Let's make it 72.02. Make it 05. Include the spread in that. 72.05. My stop has to be at 70.95. Can someone work out how much is that in pips? Everybody sleeping today, are we? 110, thank you, Richard. Okay, so it's 110 pip stop. Now I'm going to risk $100 on the trade. So everybody got the video, everybody got the email, the explanation on how to work out this. So it's $100 divided by 110 pips. I've got to trade at 90 cents, but that's US cents. So convert that to Aussie dollars. About 64 cents a pip. So I'll trade at 60. So my volume is going to be 0.0 0.06. Everybody knows, can everybody understand what that means? How I got that number? I've just talked you through it. Yep, all good? Great. I did send out an email last week and the video and all that so that you could work it out. But let's place this order now. Okay, so here we go. Okay, the first thing is 7205. My stop at 70.95. And I'll just put any stop for right now, the target, and I'll adjust it in 1 second. Okay, and let me adjust the target. Okay, there we go. So you can see that my entry is at the break of that candle. My stop is at the bottom of this candle. This is my 1-to-1 point. Okay, so normally what I'll do is I can extend that further to like a 2-to-1 point, which will be around about there somewhere. And then I just make sure that when I get to the 1-to-1, I close out half of my trade. That's the way that I like to do it. Okay, so there you have it. There's the numbers. Entries at 7205, stop at 70.95. My 2-to-1 target 74.43. Well, 74, yeah, 74.43. Any questions on that one? We all clear? It's a long trade too, so you can relax and stay. So it's a pro swap trade. Excuse me. Okay, all right, let's move on. Let's have a look at the Euro USD. Euro USD. Okay, we had the big candle that was caused by monetary announcements 2 weeks ago. It's changed the complexion of our chart. We survived a rate decision, and who thinks I've got a trade set up right now? Okay, I've got a 1 yes and 1 no so far. 2 and 2 now. Who else? A 3 and 3. So that's at 50-50. Okay, it is a trade setup, guys. Remember, trading in a trend, our moving averages have crossed over, so, and we've pulled back and we've got a fractal at the bottom, so, and on top of that, that is an inside candle. Okay, so this should be a trade setup in that direction. Now, before, an important thing that I have to say here right now, okay, yes, the Fed rates went up, all right, so they increased the interest rates, and yes, their plan is to do it throughout the following year. But we can't let that stop us from trading, okay? Because this is something that means all year you're never ever going to look for a trade long in one direction. Momentum swing all the time. Last week we had a bit of a dilemma on a Kiwi dollar trade. I wanted to jump into the trade then and there. Most of you did not. Fair point, the FOMC was about to make the announcement the following day. Um, as it turns out, that trade went in our direction, then pulled back, so it didn't get affected as much as we thought it would be. So at some point, you need to make a decision for yourself how you're going to make your trading decisions. And the quicker you address that and write that into your trading plan, the easier it will be for you to make the trades happen. Okay? So it's very, very important for you to get comfortable with your decision making process. So with this one here, this looks really good, and somebody's already made the comment, Lois has made the comment that we actually already triggered in the trade, and that is correct. So let me zoom in because the top of this candle has already been broken. So if I get in right now at market, I'm actually getting in at a lower price. So let me just measure this one out. If I get in at market right now and I go for a let's say a 72 pip stop, 72 pips at 107.95-ish, or let's go 90. Let's make it a 75 pip stop, $100 risk, 100 divided by 75 puts me at $1.30 per pip. Convert to Aussie, puts me at about 95 cents a pip. So my trade size is going to be, I'll go for 0.09. Okay, so my volume is going to be 0.09, and I'm going to enter at market right now. Okay, so let's jump in, right click, trade in, new order, 0.09, and my stop on this one's going to be 107.95, 7.95, and I'll just put an arbitrary target for now, and I'll adjust it in 1 second, and here I go. Okay, so I'm in the trade long, just in case anybody was not sure. The reason is I got an inside candle in an uptrend pullback. So if this trend is true and continues and we go in that direction, well then that's what we're actually hoping for. Okay, so my risk there is about 75. So this target, let me just push it out to 150. 150 is about there. Okay, so I've just placed my take profit at my 2 to 1 point. Again, remember, if I get to 1 to 1, which is over there somewhere, after this class finishes, I'll set my auto trade to close out half the trade automatically for me. Okay, so there you have it. Everybody understand? Euro USD, we are in at market right now. Any questions on that trade? Great. All right, so for those of you who are taking it, just make sure that you've adjusted your risk to the correct size that it is suitable to your account. Okay, let's move on. GBPUSD. Oh, this is like trading heaven. Look at this. Oh, this has been the best pattern, this one. I was really disappointed that we didn't get a setup back down, okay, because we've already had a few trades on this one. Eventually the pattern's going to fail, we know that, but is this another setup for us right there? Yes it is. Who likes it? So this is GBP USD. Okay, so I can't shy away from that. So I'm going to place, it's a pending order, don't forget, okay? This one's a pending order, just like the Aussie dollar one. Let me zoom in a little bit more just so that I can see it a little bit better. Okay, the high is 149.49. So we'll get in at 149.54. My low is 48.64, so we'll put our stop at 48.60. Can someone work out my stop distance from 49.54 to 48.60? It's 94 pips. So 94 pips, $100 divided by my 94 pips gives me, I've got to trade at $1.06. I've got to convert to Aussie dollars. Got to trade at about 75 cents. So let's go with 0.07. Okay, so here we go. Right click, trade in by stop, 0.07, and the level is 49.54. I'm very close to it. My stop is 148.60. I'll put an arbitrary take profit for now, and I'll adjust it in one moment. We're happy with that. And there's the trade. Okay, so you can see my entry is at the break of that candle, and my stop is underneath there, and I've got a target up there somewhere for right now. Just remember that if this was to now come down and break the bottom here, then I've got to come back and cancel the order, and therefore I won't be participating in this trade. Now let me just measure that stop distance, 94. So let me just adjust this a little bit lower, about there. And again, if I do get to my one-to-one point, which is somewhere in the middle there, I will make sure that I close out half the trade and bump my stop up to break even. Okay? Any questions on the GBP USD? Is this a counter trend trade or is this a trend trade? Let's see if I can wake you up. Counter trend or trend-based trade? Yes, Linda, that's correct. Ray, correct. Lois, yes. Richard, yes. What is it? Paul, yes. Pratish, yes. Great. Okay, good. Good, Romy. Yes, it's a counter trend. The trend looks very solid. You know, it's doing this. So if it does, all we wanted to do it is do it again. And then if it wants to come down, we don't mind. But as long as it pulls back for us a bit, get our profit. It's a counter trend. We're going against the trend, but what makes us the most confident about this trade is the pattern. So it's a pattern. It's essentially a nice pattern trade. Okay. All right. Carry on. Have a look at gold. Okay, gold is starting to now maybe form a little bit of consolidation down here. We're still very much in a nice downtrend. I don't really want to go in this direction unless I get a clear break out of that area. Okay. However, if we break out of this area with a nice candle like this, then I would be happy to continue and short again. Whilst I'm in here in the middle, I'm just going to sit along the sidelines. Okay, so, and that's okay. I've got plenty of other trades available to me, so I'm not going to try and force one here. So that's the current scenario with gold. It is going to be under pressure most of the year, especially if the US dollar does what they're saying it's going to do. It will keep pressure on gold for most of the year. Okay, so it wouldn't surprise me if we do get to the 1,000 level at some point, and then obviously if we break that, it would be a big psychological break, and we could push into that 900 zone. So again, it's not a prediction. It's just saying if that was to happen, it wouldn't surprise me. And if I see that it's starting to move, and the pattern set up, well then I'll be happy to trade it. All right, so we'll move on from gold. US yen. All right, now the US yen, we got the big spiking candle here when the BOJ announced their monetary policy. Initially it shot up, and then I guess the market didn't really know what was happening, and then I guess the fact that their plan was to print out 80 billion, which was significantly different to the 300 trillion which they did about 2 years ago. So the market basically pulled back and it's come back down. Now, this is one trade that I particularly would like to participate on, and if I see really good setups in the long direction, it's the type of trade that I don't mind holding on for like 2 months or 3 months to play out. Okay, so at the moment I don't see an entry. And right now, this line that we drew is going to come under some potential threat, and we could break down on it. I don't have a signal in any case in either direction. So at the moment, I'm just going to sit tight and I'm just going to watch how this one plays out. All right. But if we do get the opportunities where the market, for example, may come down a little bit like that, and then if it starts to swing and starts to head back, then definitely it's a type of trade that I wouldn't mind joining in on. Okay. And it's a longer term based trade. Okay, so we'll try over the Christmas break. I'll do my research really well, and we'll try and see if we can pick out a trade that we perhaps that really good trade that sets up the whole year that we can possibly make a good 700 or 800 pips out of. Okay, I think that this could be the one. We just need something to show up and spark it along a little bit. Okay, so but for right now, I've got nothing on the US yen, so we'll leave it alone and we'll move on to the next one. Euro yen. Let me have a look at this pattern. Okay, so we've got this wedge, which has got this one funny candle, okay, which we all remember when the euro did what it did. And we also got this big indecision candle, Bank of Japan. We didn't attempt to take none of these trades down, so we didn't participate there. Let's just wait this one out, guys. Let's wait this one out and let's do what we do best, and let's see if it comes to us over here. If it comes to us over here, I believe we could get a good entry back up into the channel. Okay, so at the moment we're kind of halfway, roughly in the middle of this falling wedge. So let's just wait. Let's see if it comes to us, and if it does, well then we'll be ready to take action on it. Okay, let me have a quick look at a 4-hour chart. 1 second. No, it actually looks worse on a 4-hour chart. So let's stick to the original plan. Let's wait for the market to come and meet us, and then let's see if we can take advantage of that trade. All right, Kiwi dollar. Okay, I just saw this. What do we like better? Because sometimes you can get two patterns out of one. I actually like this rising wedge better than the parallel lines. What do we think, guys? Can I just get your opinion? Which pattern did you like better? The wedge or the channel? W for wedge or C for channel? Okay. Most of you. Okay. One person saying neither. One person saying channel. Everybody else is saying the wedge. I think I like the wedge better. Let me get rid of the channels for a second. Okay. It actually looks not bad, the wedge. So I've got 2 touches already on both sides. So I'm ready. I'm ready for something to happen. So I get the feeling that we could be up here, and then we could get our opportunity to short back into that pattern. So at the moment we're still in the middle. So I don't have anything. The only thing that I could look for, let me zoom in a bit and I'll show you, is just long opportunities inside a trend, which we did try last week. Remember, we had, I think it was this, we already had that set up, engulfing candle, but we tried to grab it with a pending order and we didn't get in. There was another one here, a reconfirmation right there, another engulfing candle to go long, and but other than that, there's nothing. So since we didn't take those, let's ignore them and let's trade the wedge, and let's see if it comes up to us, and then it gives us an opportunity to short. Okay, so essentially for today, for right now, there's nothing on it, but it is a really nice pattern, setting up really well. So if you see these types of patterns, tell you what makes these kind of patterns really well. See these areas here, it's not just one sporadic candle that gave us this point. It's a cluster, just like over here. It's a nice little cluster, and again and again. Okay, so it just makes these lines so much better. When I was with the parallel lines, I had a line that was taking this point here like that, but it had this mess over here. Okay, so I do prefer this one. I've had better experience from this type of patterns. Okay, and they're starting to turn around. So let's see if it comes up to us and give us an opportunity. It might happen around about, oh, it's actually really good because looks like it'll happen around about the 70 mark. 70 marks, big psychological mark as well. So actually looks really good. Let's wait. Let's see if we get that far. Okay. All right. Last one for the week. Euro AUD. Are we in an uptrend or a downtrend? Up or down? Give me a U or a D. Up or down? I've got one up already. Someone's saying down. Okay. Even Stevens right now. Up is winning. I guess it matters how you define it. Okay. But in our definition 2 weeks ago, trading price action in a trend, we defined being in a trend as soon as our 24 and our 12s moving averages crossed over, correct? Our 24 and our 12. So from this point here, can everybody see that they've crossed and my 24 is underneath my 12? Okay, so since they've crossed, by the way that we defined it a couple of weeks back, we are now in an uptrend. Okay, now some of you might want to define it differently. Let me just throw a 50 simple moving average on there just to have a quick look. Give me 1 second. On my 50 simple moving average, you can see that I'm right on it. Okay, so you could argue that with my 50 simple moving average, I might still be in a downtrend. Okay, so what this really comes down to is the following: who in their trading plan actually has gone to the extent to define an uptrend or a downtrend? Can I get a show of hands? Who's actually defined, even though it may not be part of your strategy, who has defined up and down? Wow. Okay, so most of you have not. So if you have not defined it, then you can't really answer the question. Okay, as per my definition, which I gave a couple of weeks back, is my 24 and my 12 moving average. I used to use the 50 simple moving average, but with price action, I find that price action gives me enough protection and doesn't get me into too many sort of really strange trades. So I'm happy to use, when I trade price action, I'm happy to define my trend simply with my 24 and my 12 exponential moving averages. Okay, and that's in my trading plans when I trade this particular method. So therefore, if I'm trading that method, I effectively have been in an uptrend from where I've just put that marker. Is there a trade in there somewhere, guys? And if there is, should I already be in the trade, or have I not been triggered? Okay, most of you can see the inside trade, not triggered. Great. What about the engulfing candle trade? Let me show it to you. What about originally those two candles? Is the green candle not engulfing the red? Yes, it is. It's a classic engulfing candle. Now, the only issue with that is the fractal would not have appeared until this candle here finished. Okay, but when it finished, this is where it finished. So as soon as it finished, which was on Friday morning, we could have entered a trade right there in that direction. Does everybody agree with that? Now, the other option now is, as it turns out, that red candle created an inside candle for us over here. And if we were going to trade this setup, there's our entry, and we have not been triggered so far. So the question is, who wants to go in at market right now, and we're getting in at a little bit worse price, okay? Or who wants to trade the break, which will be a much worse price, but if it turns out that this just goes down right now, we may not get triggered in the trade and we get saved from it. So option one, go in at market right now, which means we're trading the engulfing candle, or option two, we're trading the inside candle and we go for it. Okay. Option two, option two, option one, option one. Okay. Most of you are saying option two. Is that because we are fearing, we are afraid of getting stopped out, or you like that pattern better? What are the thoughts on that? Because in theory, they're both valid. They're both as equal, as good as each other. So, and if I'm in a trade, why wouldn't I go in right now? We've just placed a buy on the Aussie dollar. Okay, so if we place a buy on this one as well, they're kind of almost not 100%, but they're hedging each other somewhat. Okay, so let's see. Okay, so Ray's saying the inside candle, the uptrend looks a bit better now because more candles have gone past. Fair call. Lois is saying that it's easier to spot the inside candles. Definitely agree with you, 1000%. Richard's saying it's a correct pattern by definition, so that's fine. That's good. Romi's got her own rule that says enter at the top of the bar. Okay, so that's fine. So that means, Romy, you would not be able to trade an engulfing candle setup then. Or unless you're saying you would have got in there when you went at the top of the bar. Okay, so I'm in a dilemma now. This is a trade setup. I know that I've got an Aussie dollar pending buy. So that means, let me paint the picture for you. So let's say I go long right now at market and this starts to go down. There's a chance my Aussie dollar trade is going to get triggered. And I could get stopped out here, but my Aussie dollar trade could get triggered. Doesn't mean that my Aussie dollar trade is going to be a winner, but it's going to get triggered. If this goes up, the the Aussie dollar trade is probably not going to get triggered. So there's a chance that I'm only going to get one of the two trades. Okay. Let me just measure. Give me 1 second, and I'll give you my decision. Okay, entering at the break would mean that I have a 210 point stop. Entering live would mean I've got about 145 point stop. So what I'm going to do is I'm going to go live. I'm going to go in at market right now. I'm happy with that setup right there, which means I could have been in the trade right here. All right. Actually, what I'm going to do is I'm going to try and be really cheeky. I'm going to put a pending order right at that level where I should have got in the trade to buy it. Okay, that'll make me more comfortable. And if this market starts to go away from me, I might come back and jump in over there. Okay, but that's what I'm going to do. We happy with that? Let me measure it. It's 110, so I'm going to have to trade at about $1.10. 100. Sorry, 90 cents. So it's going to be 0.09. This is Euro Aussie, so it's going to stay in Aussie dollars. So the volume is going to be 0.09. My entry is just here. It's a buy limit. 0.09. My stop 150.20. I'll give myself an arbitrary target and I'll adjust it in 1 moment. Okay, so I've put a pending order to buy on a little pullback, okay, which will basically get me in at the level that I should have got in on the trade. My stop is over here where it should be, and my target, let me just adjust that target to about there. And of course I will kick in a 1-to-1 point if I get to that level there. Okay. All right. Any questions? A couple of things. What's someone saying? Didn't we enter long Euro USD? Linda's saying won't be this won't this be doubling up? They're not 100% correlated, Linda. Okay, yes, we are long Euro USD, but no, it's not a 100% correlation trade. Okay, and what you should also consider in my trading rules, every currency pair that I have here, if I get 9 setups, I will take 9 trades. I've already addressed that in my rules, so I'm happy with that. Some of them do correlate with each other a little bit, and some of them are anti-correlation, like for example the Euro Aussie compared to the Aussie USD. Okay, next question. There is a trend line coming down with 3 touches. What with where? That's the one you're talking about, Linda? Sorry, Lois. Okay. All right, so Lois is saying there's a trend line coming down with 3 touches, and I've just decided to go long. Okay. Now, when this is very important, all right? First of all, I've made this decision based on trading in a trend, so I'm going to ignore that top trend line. But more importantly, I was aware of that line. This touch here was caused by this stupid, silly candle which went like 600 pips. So it doesn't have the power where the market hung around for a couple of days like this one over here. Okay, so I don't generally like to use these big sporadic candles. Okay, so but yes, you have got a fair point. All right, but we're still in any case. So see all these kind of questions that you guys are asking me right now, these are the types of things that you should have in your trading plan so that when the time comes for you to place your order, you do not have that dilemma. Okay, so it shouldn't be like a torturous event. Oh my God, do I take this trade? Do I not take this trade? Do I take it? Do I don't take it? What should happen is it should just come out and say, yes, this is my rules. I'm in this trade, or no, this is not my rules. I'm not in this trade. If you can get yourself to that level, you know that you are trading with much less emotion, which is going to make the process much easier for you. Okay. All right, so let me summarize what we've done for today. First of all, Aussie dollar, we have got a pending buy at 72.05. We're not triggered yet, and our stop is at 70.95. We're going for 2 to 1, remembering that at the 1 to 1 point, I'm going to close out half the trade, move the stop. Euro USD is the only trade that I've gone in at market. I am in at market right now. You can see the trades fluctuating there. I've taken I got in at 108.69. My stop is at 107.95. Okay, so let's see how that one plays out. GBPUSD, I have got a pending order to jump in at 149.54. Stop is at 148.60. Again, remember with the Aussie and the GBP USD, if we break the down candle, the bottom of this candle, you need to come back and cancel out your order. Gold, we are in, seems to be starting a consolidation period, so we're going to leave it. US yen, we're going to wait for a nice setup. This is possibly the trade that we're going to hold on to for a while, so we're looking for a good entry. Euro yen, we're in a channel, we'll wait for it. Kiwi dollar, we've spotted a rising wedge. We're in the middle, so it's no action. Euro AUD, we could have gone in at market. We could have gone in on a pending break of an inside candle. Lots of dilemma there. I've placed a buy a limit to get in at 151.40. My stop would be at 150.20. All trades today, I've put the standard $100 risk on. Okay. Linda's asking me how come there is no commission. Linda, you may have a different type of account. I've got the standard markets account. Okay, so you probably trade in an ECN based account. Okay. All right, guys, this is it for the year. I wish you all a safe Christmas and merry time with your families. I will email you the whole schedule probably over the next couple of days. If you have any questions, I'm still around. Just email me. I might just take a little bit longer to respond than usual. Make sure that you I'll send out a couple of things and exercises for you to do over the break for those of you who want to do a reset in your trading and come back in 2016 fresh and ready to go. So just again, reminder, there's no more classes for this year. The first class will start on the 4th of, hang on, let me just check my calendar. I think the 4th is a Monday, the 4th of January. One second. The 4th of January is a Monday, so that'll be our first class. So in essence, we're only really missing two classes in between, well, three classes, okay, for Christmas Eve and the in between classes for in between Christmas and New Year's Day. So everybody take care. Look after yourself, and as I said, if you do have questions, just email me. I might just take a little bit longer to respond to you, but I will. Take care, and I'll see you all in the new year. Bye for now.